May profits be upon you. Welcome to another weekly market forecast. We're looking at gold. I'm looking at gold futures. Gold futures. But I want you to understand those that trade gold CFDs, um, it looks like this. And look at gold futures. Go back to gold futures. Hello, 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 fresh. There you go. All right. And you can see that there's not a whole lot of difference. All right. But I like gold futures because everybody gets the same price. All right, CFDs, you'll have to deal with, you know, slippage and price differences between the brokers. I don't like that. I like standardized, regulated markets, and gold futures is it. Now, if we look at gold futures, you can see on the weekly. No, I mean, sorry, this is the monthly time frame. The monthly time frame. You can see it down here. All right. And you can see it up here. Okay, so we can see that it's very bullish. Look at this month. All right, August, September, and here we are in October. Now October hit a high and then pulled back. All right, that's cool. That's very cool. That's very healthy for a trending market. Why? Because we can see it here. Pulled up, came down. We moved sideways for a few months, and then we gapped up. All right, leaving this bullish fair value gap here. I love to see bullish fair value gaps in an uptrend because it confirms market the what do you call it the cash flow, not cash flow, order flow. I'm sorry, I'm having brain farts. All right, we have an order flow here, so it's very bullish. All right, there's no reason to really look for sells in a market that is this bullish. All right, if we go to the uh, weekly, this is where we start marking up stuff. Look at this, week after week, week after week of bullish price activity, price action. All right, and we can see uh, where are we at here? Yeah, well, we can see this bullish fair value gap here. All right, there was one here, and then we didn't necessarily have to come back to it to go higher. We just kept going higher. Why? Fundamentally, there's a lot of things going on in the world, man. Whole lot of tariffs and the Russia Ukraine war and the Gaza war starting to heat back up for after a ceasefire. The ceasefire is what brought this down, and then we start to see the buyers come back in. Why? Because there's that tension started to looks like it's starting to reignite. Looks like the peace agreement, the ceasefire is there's some trouble with it. I mean, this, and then we have China, and then we have the new China and their retaliatory tariffs against the U.S. and the rest of the world, and then we have Trump announcing new tariffs on Canada, 10% added to the already high tariffs that they are trading. So when the world sees tension, gold goes higher, right? But we have this fair value gap here. And if price does come towards, trade towards the low of this week's, last week's candle, it'll run it into this fair value gap and could use it for higher prices. I think gold is definitely going to go higher, and you should invest in it. That's not financial advice. It's just me passing on some. I think it would. I think it'll work for you, but that's don't take it as financial advice. Okay. All right. Now, if we go to the daily, let's take a look at the daily so we can see the current price action. Well, there's that fair value gap, and price just came short of it. Right now, here's the deal: there is a bearish fair value gap here. Look at that. All right, and that is something to be reckoned with. Now, we're in between a bullish fair value gap here and a bearish fair value gap here, but this one is a weekly fair value gap. Yeah, it's bigger, so that means not bigger in size, but bigger in time frame. It's a more uh, macro view of the of this market, and we can see that it will probably overpower the daily fair value gap. All right, just like a monthly fair value gap here would be would out you know would overpower a weekly fair value gap that's opposing. So just understand the higher time frames dictate what where the market is going. Period. End of story. The lower time frames will indicate the direction it is going to go in. You understand? We're going to the markets will dictate if we're going higher or lower. Why are we going lower on the lower time frames? It's because it's probably in a pullback, and it's probably going to hit an area where it will find support for higher prices to continue the higher high, higher low, higher high, higher low, higher high dynamic. Okay, so just understand the higher time frames will dictate where the lower time frames are going to direct price. All right, now what are we supposed to do if price, as long as price continues to trade under this, if price is held in check by this bearish fair value gap, we're going to see lower prices. All right, and we're probably going to see price coming towards these lows. Got it? Uh and and I will look for price to turn around there. All right, you got to understand we're looking at external range liquidity and internal range liquidity. External range liquidity are these highs, all right. When price reaches external, it comes back in for internal, like this fair value gap right here on the daily. Price came to it, then went higher, and then as we take and establish new swing highs, which are external range liquidity, price creates internal range liquidity, reaches for internal range liquidity in order to get the next bullish leg started in an uptrend. All right, so that we can attack the next external range liquidity target. Right now, we are in between. Okay, and I like the fact that we have an indicator here, this fair value gap. If price closes above this fair value gap, meaning that the bearish fair value gap fails, we are going back to the all-time high pursuits that we've been on. All right, we've been pursuing the all-time highs and establishing one after the other. All right, and we are in a very strong uptrend. There's a lot of tension in the world, a lot of things going on. So we have the fundamentals aligning with the technicals. Got it? All right. Now, as long as the price is held below, if we come up here and then on a lower time frame we have a break of market structure to the downside, I'd be looking for the pullback for lower prices. Yeah, I would consider that for sure. As long as this doesn't get traded above, we're going to see lower prices. So we are in between. We have to let the market tell us which way it's going to go. Got it? If we go to the 4 hour, what we can see is, I love to see this. Down, oh, sorry, what is that? All right, down move, up. All right, what did we do? We made a new high. We made a new high and then came below. I'm looking for price to test these lows. All right, we establish fair value gap, fair value gap, fair value gap. Price comes back into that fair value gap and it's held there. We come back up to it, held there. If price comes and sweeps these relative equal highs right there for the internal range liquidity, I'm looking for price to come back towards these lows for external range liquidity. Got it? On this time frame, right? Meanwhile, on the larger time frame, we'll be hitting this bullish fair value gap. And like I said, we've already established external range liquidity, swept that high here. All right, swept that high here, coming back for internal range liquidity, and that would be this bullish fair value gap on the weekly. We came close to it, pulled up. I'm looking for price to do something like that. Got it? I like a bullish gold, all right, but I will take this opportunity. If price finds resistance here, I will look for market to give me. Why are you doing that? All right. I'm looking for price to give me a higher high, higher low, higher high, lower low. And I would like to take this down to here, taking out these lows towards these lows. Yeah, I would. Oh yeah. Oh yeah. All right. So am I bullish or am I bearish? Well, like I told you, look at this fair value gap. Look at that fair value gap. I'm bullish in this market. If this fair value gap fails, if we get a close above it, then I'm looking for higher prices. Got it? If we get price to hold here with this bearish fair value gap, if it holds, I'm looking to take it down for a short, profitable move down to this bullish fair value gap so that I can take a high probability trade to the upside. So I am definitely bullish, but price has to get there from one to one, from one PD array to the next. So there's a little opportunity there. All right, that's where I'm at, my friends. That's where I'm at. I'm hoping that you catch what I'm trying to say to you. All right. If you have any questions, leave them in the comment section, and do not forget to go and check the videos that I just put out: the Euro USD, the US dollar, and I also put out. Where is it, man? Where is the other one I just put out? Hold on, man. Hold on. There it is. The pound USD. I was looking for it. Pound USD, Euro USD, and the US dollar. All right, go check those out, and I will see you in the next video. Thank you for watching, and may profits be